Oh, good morning, good morning, good morning. Let's see here.
Moral of the story is big balls, small balls, it's all about perspective. Here's a tip: buy real estate.
That's right, guys. Good morning, good morning. I wanted to, I don't know, give some humor to this morning. It's Friday, right? Hopefully, we're kicking it off to a great day. I'm Mark Jones, for those that you don't know. Let's see here. Founder of ReviewMyMortgage.com, the largest index of mortgage programs in the nation. Also very, very keen and high in my regard to education. I'm here to educate as many folks as possible in regards to the mortgage real estate world. Now, I won't talk to you guys about politics. I won't talk to you about the stock market, things of that nature. I tend to stay in my lane. I think that is the best way for anyone today to make it further in life, is stay in your lane. So yesterday there was a meeting that the Fed had around 3 p.m. Central Time here, and they didn't mention anything about how Trump could or could not affect the economy as he becomes the 47th president of the United States. But what they did do is they dropped another 0.25% off of the Federal Reserve rate. Now, for those of you that aren't aware, the Federal Reserve rate is what interest rate that banks and institutions borrow money from, that they then take that money and lend to consumers. Now, of course, there's a margin on that they are allowed to make money on, because they're not in the business of just giving the money away, kind of like the pandemic time frame where rates were at zero. That didn't actually mean that mortgage rates were at zero. So making sure that you guys understand what that means and how this most recent rate cut is going to actually affect you guys. The previous rate cut that we had did not necessarily change interest rates much. As a matter of fact, it actually drove mortgage rates up just a tad. Let's see here. Mortgage rates typically follow the 10-year Treasury bond versus the Federal Reserve, so to speak. But let's look at an article that I found here. Let's go to our reference view. Boom. So I use Mortgage News Daily on a daily basis so that I can get the right information in regards to what's happening in our mortgage industry, real estate world, because mortgages affect real estate. I think there's only like 30% of all transactions in regards to real estate are purchased with cash. So if you're not tapped into that 30% of folks that are paying cash, stroking checks, you're going to need mortgage financing. And that is FHA, USDA, VA, government loans, conventional, private loans. And then you've also got a rise in what is considered non-QM or non-qualified mortgages. Those are like your investor products, your bank statement loans, your I-10, your DSCRs. Those too are affected by what is happening. So I want to go over this quick article here. It says breaking news. Boop, boop, boop. It says breaking news, the big, mostly no Fed related rally. It says as intraday charts give way to daily charts in the coming weeks, it will be all too easy to look back on today's calendar and conclude that it could only could have been done Fed announcement that was capable of motivating a 10 plus basis point rally in the Treasury, a half-point gain in the MBS, which is mortgage-backed securities. If you ever hear MBS, it's talking about mortgage-backed securities. As we hear in the past, no, that rally was largely already in place ahead of the Fed announcement. We can't chalk it up to a high continued climbing numbers the simplest theory is that there are dip buyers in bonds now that the election is over. What that means is there are less people that are actually buying our bonds. It could be that reason, but it also could be the reason that others are not talking about, which is this Brexit movement that is happening over in the other side of the world, where they're trying to move the world currency or the exchange currency over to a different currency than the US dollar. Is it going down in value? Is it going up in value? Is it going to contain? Is it going to maintain? We don't know. Only time will tell, and that has a lot to do with you as the consumer. Let's continue here. It's not a bad one, but we could just as easily say toward a high rates got ahead of itself yesterday and fell back in line with the trend today. Either way, MBS and mortgage rates have outperformed the move in Treasury, and there is at least a moment of hope for optimists to imagine an inflection point. So what that's saying and what actually took place is this rate cut did affect mortgage rates. We did see a little bit of drop in our mortgage rates yesterday, and I'm looking forward to the market opening here in just a bit so that I can check that because I've got some borrowers that need to get locked in, and I've got plenty others that are on the fence that we'll be reaching out to. So it's important for you guys to understand as real estate professionals what is going on in your market. Yesterday, we showed that rates were at 7.13, and they have dropped about 15 basis points down. Now, is that enough to move the needle, so to speak? It actually could be in some cases. I think it's important for those out there home searching, home seeking to get your options and ensure that it's not always about the interest rate when it comes to things like this, like real estate itself. It has to do with your thumbprint, your situation. You could have the best credit in the world and still, unfortunately, have some issues with your home purchase. But I can guarantee you that working with an expert, it will get a lot better and it'll be a much smoother transition to what you're trying to accomplish. Let's see here. So what I also want to do is just type in real estate news in San Antonio, and let's see if there's anything that has happened in San Antonio in the last recent days. The housing market in San Antonio is cooling off with home sale declining and prices rising. So that in itself is a odd theory. See right here, it says that home sales have declined and prices have been rising, which is kind of not what we're used to seeing. Typically, when home sales retreat, you've got a loss or downfall in the actual property values. And what you're seeing is property values continue to increase. Let's see here. In September of 2024, the median price of homes in San Antonio was $263, a 2.4 decrease from the previous year. Homes are also taking longer to sell, with an average of 60 days on the market compared to 43 back in 2023. What's the reason for that? Honestly, I think it has a lot to do with buyer sentiment and expectations. Rental market. Landlords are offering incentives to attract tenants such as month or free rent due to oversupply of multifamily homes. So then you've got the other factor that is also the largest reason as to why you're seeing an increase in price, even though there is a decrease in the amount of sales. It's the housing shortage in Texas. It's worsening, included in San Antonio region. Even though more homes are being built than before the pandemic, the shortage is still growing. So what does that tell me? What does that tell us? That basically tells us, guys, that real estate is one of the most secure investments or places to put your money or places to throw your money at. And right now, people are staying in their homes. Obvious reasons, rates, They're not wanting to lose that current interest rate that they have. Therefore, we're at this odd gridlock or standstill, like when you're at a high school dance and you got the guys on one side, the girls on the other side, and nobody wants to kind of break the ice to get the party started, so to speak. That's kind of where we're sitting right now. And what it's doing is it's continuing to drive home prices up, even though they're sitting longer on the market, because with less inventory, simple supply and demand. I've talked about that many times, supply and demand. It is that simple. When there is more supply of homes, the prices are going to go down. When there's more supply of homes, when there's less supply of homes, the prices are going to go up. When there is more supply of homes, the prices are going to go down. Same thing with oil, same thing with electricity, same thing with all commodities in itself. But I'm hoping that you guys are getting some information out of this that you can use to speak to your borrowers and educate them on the importance of owning a home. Because let's face it, the idea of the 2020 through 2022, everybody, let's make some money on real estate by buying and selling and buying and selling. That was a blimp on the whole grand picture. If you were able to take advantage of that, great. But that was not the, historic reason to own real estate. I think, who was it that said it? Somebody said it. I'll figure it out. It's way too early. But the quote is, don't wait to buy real estate. Buy real estate and then wait. And I'll leave you with that, guys. I hope you have a wonderful day. Happy Friday to all that are out there. And here's a little laugh for you one more time.
Moral of the story is big balls, small balls, it's all about perspective. Here's a tip. Buy real estate.